Investing for beginners. Invest $5 a day with an average return of 10%. What you could make. Can pocket change build a fortune? Are you wondering if true financial independence is within your reach, even with a modest daily contribution? Many believe you need a large fortune to start building long-term wealth. But what if a simple $5 a day could lead to extraordinary results over a lifetime? In this eye-opening video, we're going to explore the astonishing potential of consistent investing for beginners, demonstrating how committing just $5 every single day, with an average annual return of 10% for 45 years, could transform your financial future. This isn't about chasing fleeting trends or risky ventures. It's about embracing the timeless power of compounding returns and disciplined financial planning. We'll demystify complex concepts, showing you how accessible the stock market truly is, and how a focused investment strategy can build immense wealth creation. Learn how to harness the power of ETFs and index funds to minimize investment risk while maximizing your earning potential. Before we dive in, if advertisements should interrupt this video, please do not click off of the advertisements. Please allow them to play through as a thank you to me for bringing you this valuable information. Now let's continue. The grand dream. Can pocket change build a fortune? Have you ever found yourself dreaming of a life free from financial worry, a future where you have genuine choices, where your money works for you? Perhaps you've dismissed this dream, thinking it's only for the lucky few, or those who start with immense sums of money. The idea of building significant long-term wealth might feel overwhelming, a mountain too steep to climb, especially when you consider your daily expenses and current commitments. You yearn for financial independence, but the path seems unclear, shrouded in complex financial strategies and seemingly unattainable goals. But what if I told you that the key to unlocking that powerful future, to achieving astonishing financial growth, could be as simple as finding just $5 a day? That's right, just $5. The price of a fancy coffee, a small snack, or a few minutes of a streaming service. What if committing that modest sum consistently every single day over a long period could lead to a truly life-changing outcome for your financial future? Today, we're going to embark on an incredible thought experiment. We're going to trace the journey of investing just $5 a day with an average annual return of 10% for 45 years and reveal the breathtaking result. This is about demystifying investing for beginners and igniting the very real hope of wealth creation for anyone willing to take consistent action. The power of the penny, $5 a day in action. Let's set the stage for our experiment. We're talking about $5 a day, every single day, for 45 years. First, let's look at the total amount invested purely from your pocket. $5 a day multiplied by approximately 365 days in a year gives us $1,825 invested per year. Now multiply that by 45 years. $1,825 per year times 45 years equals a grand total of $82,125 of your own money invested over that period. Now pause and consider that. $82,125 over 45 years. That's a significant sum, certainly, but it was achieved through small, manageable daily contributions. It wasn't a huge lump sum you had to scramble for. It was the consistent drip, drip, drip of just $5. This is the essence of disciplined financial planning and building good financial habits. So, where would this $5 a day be invested? For a strategy like this, especially for investing for beginners, simplicity and broad diversification are paramount. I would strongly advocate for a low-cost total stock market ETF or a broad index fund. These funds, as we've discussed before, hold thousands of different company stocks, giving you instant exposure to the entire U.S. stock market. They are designed to track the overall market's performance, not to beat it, which historically has been an incredibly powerful strategy for long-term wealth. It minimizes investment risk by spreading your capital across so many different businesses and industries. This allows you to participate in the collective earning potential of the global economy without needing to become a stock-picking expert. The unveiling, the compounding miracle. Now for the moment of truth. What happens when you invest that consistent $5 a day, $1,825 per year, into a total stock market ETF that averages a 10% annual return for 45 long years? The astounding result, after 45 years, could be approximately $1,440,000 to $1,500,000. Let that number sink in. Over $1.4 million. From just $5 a day. How is this possible? The answer lies in the incredible, almost magical power of compounding returns. It's often called the eighth wonder of the world, and for good reason. Your initial $5 investments earn returns. Then, those returns start earning their own returns. It's like a snowball rolling down a very long, very gentle hill. It starts small, picking up a tiny bit of snow. But as it rolls, it gets larger, and therefore, it picks up more snow with each rotation. The bigger it gets, the faster it grows. In our example, your total personal investment was around $82,125. The remaining $1,350,000 to $1,400,000 comes purely from the power of compounding returns. It's your money working for you, relentlessly, quietly, and exponentially. This is the true engine of wealth creation and the core principle behind achieving profound financial independence. It's not about timing the market, it's about time in the market. Crucial facts for your financial success. To make this journey from $5 a day to over $1 million a reality, there are a few critical facts you absolutely must understand. These are the unsung heroes of long-term wealth building. First, let's talk about expense ratios. This is perhaps one of the most overlooked, yet critical, factors in long-term investing. An expense ratio is the annual fee of fund charges as a percentage of your investment. It might seem tiny, often less than 0.1% for the best total stock market ETFs. But consider this. Over 45 years, even a difference of just 0.5% in expense ratios can cost you hundreds of thousands of dollars in lost compounding returns. If one fund charges 0.03% and another charges 0.5%, that seemingly small difference of 0.47% will erode your financial growth exponentially over 5 decades. Always prioritize ETFs and index funds with the lowest possible expense ratios to maximize your net returns. This is fundamental to wealth preservation. Second, the power of tax-advantaged accounts. Where you hold your investments matters immensely for your financial future. Consider accounts like a Roth IRA, a traditional IRA, or an employer-sponsored 401k. A Roth IRA allows you to contribute money after taxes are paid. The incredible benefit? All your qualified withdrawals in retirement, including all that amazing compounding growth, are completely tax-free. This is a powerful advantage if you believe you'll be in a higher tax bracket in retirement than you are today. A traditional IRA or a 401k, on the other hand, allows you to contribute money before taxes, or you can deduct your contributions, which lowers your taxable income today. The trade-off is that withdrawals in retirement will be taxed. Many employers also offer a 401k match, where they contribute money to your account based on your contributions. This is literally free money. It's an immediate, guaranteed return on your investment that you absolutely should not leave on the table. Always contribute at least enough to get your full employer match if it's offered. These accounts optimize your tax efficiency and significantly accelerate your wealth accumulation. Third, the average return of 10%. It's crucial to understand that a 10% average annual return is a historical average for the broad stock market over many decades. It's not a guarantee every single year. Some years will be much higher, some will be lower, and some might even be negative. The key, as we emphasized with dollar cost averaging, is that by consistently investing through all these ups and downs, you benefit from market recoveries and avoid the catastrophic mistake of selling when prices are low. The market has always recovered and grown over the long term, rewarding those with patience and a consistent investment strategy. Finally, your investment horizon. Our example uses 45 years. This highlights that time is your greatest ally in investing. The earlier you start, the more time compounding returns have to work their magic, making even small contributions blossom into something truly significant. Don't delay. The most powerful moment to start was yesterday. The second most powerful is today. Your call to action. Starting your own financial journey today. This example isn't just a theoretical exercise. It's a blueprint, a clear path to achieving significant financial security. How do you put this into practice? Step 1. Make the commitment to consistency. The most challenging part of this strategy isn't the complex math. It's the discipline of showing up, day after day, week after week for decades. Commit to setting aside that $5 or whatever small, consistent amount you can manage. Remember, dollar cost averaging works best when you are consistent. This small habit, consistently applied, becomes the foundation of your financial success. Step 2. Open the right investment account. For long-term goals like retirement planning, prioritize tax-advantaged accounts first. This might be a Roth IRA, a traditional IRA, or a 401k through your employer. These accounts offer significant tax efficiency benefits that accelerate your wealth accumulation over the long term. If you've maximized those, a regular taxable brokerage account is an excellent choice. Look for platforms that are beginner-friendly and have resources for learning. Step 3. Select a low-cost, broad market ETF or index fund. As discussed, a total stock market ETF is often the ideal choice for this kind of strategy. Funds from providers like Vanguard iShares or Schwab are excellent, known for their incredibly low expense ratios. These tiny fees make a huge difference over 45 years. Your financial advisor can help you identify the best fit for your specific situation. Step 4. Automate your contributions. Set up an automatic transfer from your checking account directly into your investment account. Make it happen daily, weekly, or monthly without you having to think about it. This removes the temptation to skip a contribution and ensures that dollar cost averaging works tirelessly on your behalf. Step 5. Embrace patience and long-term vision. The market will fluctuate. There will be good years and challenging years. But remember the 45-year horizon. Short-term dips are actually opportunities for your fixed contribution to buy more shares at a lower price. Resist the urge to panic, to sell, or to constantly check your balance. Your power lies in holding steady, allowing time and compounding to do their work. This is the essence of true asset management and wealth preservation. My friends, the journey to financial independence doesn't require a lottery win, nor does it demand that you become a financial wizard overnight. It asks for consistency, patience, and the wisdom to understand that small, deliberate actions, repeated over time, can build truly monumental long-term wealth. Investing just $5 a day may seem insignificant at first glance. But as we've seen, when paired with the power of compounding and a long-term horizon, it becomes a mighty river of financial growth, capable of carrying you to the shores of financial security and financial abundance. Your future self will thank you for starting today. Call to action. If this powerful demonstration ignited a spark of hope and clarity for your own financial journey, please give this video a thumbs up. Your engagement helps us share these crucial insights with more individuals eager to achieve financial freedom. Don't forget to subscribe to our channel for more practical strategies on personal finance and wealth creation. And importantly, share your commitment in the comments below. What small, consistent step are you going to take towards your financial goals starting today? We'd love to hear from you. Disclaimer: this video is for equipping, educating, and empowering and should not be considered financial advice. Investing involves risk. Always consult with a qualified financial professional before making any investment decisions. Your financial well-being is paramount.